All right. Well, good afternoon, everybody. Welcome to Season 1, Episode 10. Back at it again, and today is a good day. We've got some good things to discuss today. A lot of changes in the market, and we'll be touching on those topics. But first, let's get to our introductions. I am Tom Christie.
Bill Seach.
Trey Reedy.
Adam Bauman.
John Bauman.
So we got a new guy with us here today, John Bauman. So first, John, just tell everybody a little bit about yourself. Where
Been with us for a couple months now.
Ben.
Yeah.
So, but this is somebody that's been coming from the retail side, right?
Right.
And now getting to see things that we talk about, like why wholesale correspondent retail is different. This is somebody who's witnessed one side, and there's a 9-day difference as far as.
I'm somebody that's taken the red pill.
Yeah.
So again, it's we have talked a lot about it, but again, it's one thing when you start seeing the math for yourself, and that's that like seeing is believing, and actions speak louder than words. And again, just trying to shed light to the consumers. And again, John's somebody that works in this industry that is now able to provide his customers with a much better product and kind of get away from some of these higher cost loans that they've been subjected to, and it's just getting harder to get these people into it. People are starting to get smarter.
I think we
started to pay
addressed
attention to the news.
I think we addressed all that in like episode 2, right? Or broker versus bank, that type of thing.
Yeah.
But what's the major difference, John? What do you see? I mean,
I mean, I'd say not only is the pricing better on our side, it's just the product variety. I mean, when you work for a national bank, you're kind of prisoner towards one set of underwriting guidelines. Where basically, being that we're a broker, we can use any bank we want. Some banks have stuff that other banks don't. Some banks have better pricing. When you can only use one set of products, that's it. I mean, the underwriter declines a loan, they're getting a notice of adverse action taken. I mean, there's no rejuvenation of that loan program.
there's no
You get
plan B.
yourself a rogue appraiser. You get yourself a rogue underwriter. I mean, it's sorry.
John's already had it too with the one you just closed with the lady that sold the bulldozer.
Yeah, 50 caliber weapon down payment.
And a bulldozer sale.
That would never, at my previous life, that would have been they would have declined that so fast, your head would spin. But
It does further expound on what you just mentioned there, as far as having multiple facets and options. There's another retail lender out there that we were talking to today, and kind of shed some light on some of these investor loans. And you'd think that we just showed this guy how to slice bread. So mind you, this is somebody that owns a company that does mortgages and real estate transactions for people, yet is not going to be coming to our company to obtain his financing because he can't do it where he's at. Again, it's just another way to, there's more ways to skin a cat, and you just don't want to have all your eggs in one basket. And that's where the luxuries of being on the wholesale side are. So we're happy to have you with it, John.
I'm
We're
happy
looking
to be
forward
here.
to it.
One more question, John. What about fees? Like, how much did you have to charge on a certain loan, or comparatively to what we do? You know what I mean?
In thousands of dollars,
Well,
multiple.
yeah.
I mean, so I would say, for example, on a $200,000 loan in my previous life, the fees were between $7,000 to $8,000 or more.
More.
I mean,
In lender fees.
in
lender
just
fees.
costs.
Yeah.
Okay,
Wow.
I don't even know what these guys were doing on the back end of the loan. God forbid.
Sure.
That it'd probably make me vomit all over this table here. But it was substantial. I mean, I would say even in the best cases, here I'm still priced at least 1% better in rate. So, like, for example, if we're at 4, they would be at 5.
Wow.
On
And
a
that's
mortgage.
that's hundreds of dollars a month. And you made a great point today. Like, that's money that's maybe honeymoon money that somebody never got to do. That's a great analogy you made.
Yeah, I mean, a lot of people out there that are blue-collar people are really getting screwed. I mean, to be quite honest,
And they don't even
by
know
these
it.
national banks. I mean, $3,000 to somebody, that's a car for their kid.
Yeah.
That's that trip they never took. Their mom or dad's, dying in the hospital and they need to make travel
Some money,
arrangements
yeah.
or some emergency or something like that. That's the difference maker. I mean, so you pay $3,000 more because some company decided to sponsor the local real estate association lunch. I mean, that doesn't make sense. I mean, that's why that's why I decided after a long amount of research, to make the switch to the Stratton, because it's a better vertical.
Yeah, and again, that's that wholesale side offers those luxuries.
We don't have Stratton Mortgage Stadium either, do we? Right?
If we did, we'd be charging higher rates.
Quicker.
Right.
Yeah.
Again, that comes down to you think about it. You see the CEOs, driving around these cars. How are they getting these cars? I mean, and again, back to John's point, like those higher costs and fees, you're just paying for marketing for them to get that next lead.
Right.
And again, we have less overhead here, where that's why we don't have to, charge egregious fees.
That's exactly.
And again, the math speaks. Again, it all tells the truth to everything.
Speaking of math, I mean, let's talk a little bit about the refi boom that's going to come back now, because it's hitting right now.
Yeah,
right?
and that's something I want to touch on was huge rate drops. The 10-year Treasury had a significant pullback last week. I mean, how many of you guys heard at the end of last year, like, this is it? This is the end of the low rate run. We're going to see rates in the 5s in 2019. And the so-called experts and talking heads on TV that we all want to dump all of our faith into, that they know what's going on, we're wrong once again.
Right.
Rates have now, on the government side of loans, we're seeing rates in the 3s. So if you're out there looking at an FHA or VA right now and you're seeing something in the 4s or low 5s, you're being taken advantage of. And that dollar amount, it adds up over each and every single month of payment. And to John's point, and that's in the tunes of thousands. We're talking about putting a comma in here now.
Well, or if they're charging you
Yeah.
those fees, right? Well, now with us, not only are you not being charged those fees, you're actually getting a credit.
Yeah.
So, a lot of people don't realize the option is there that you can elect to take an interest rate higher than what the market rate is, and the lender can give you credit back.
Which will help decrease your cash out of hand.
Yeah, maybe you're at a lender and the rate's in the high 4s and they're charging you origination fees. Not only would you not have those origination fees, we could actually give you a credit towards the third-party title fees, maybe your first year's homeowner's insurance,
your escrow setup.
Your escrow setup. So now, effectively, you're bringing less money to closing. So maybe your situation's not necessarily about rate. Obviously, somebody wants to get the best deal they can, but maybe cash flow comes into play, or money that you need. Well, that slightly higher rate might get you the money back that you need, right? So that, depending on somebody's scenario, but we can offer that, whereas they can't, because
and we'll take the time to break that down and say, hey, here's a rate that offers a minimal credit. Maybe if you go up an eighth or a quarter on that rate, it gives you a significant credit. And I've seen cases where maybe that difference in rates could be extra $1,000 worth of credit, but maybe only $10 difference on the payment.
Well,
so to trade $10 a month to get $1,000 less of cash, like, again, that's in 1 year, that's $120. Now do that, see how long it would take to catch that $1,000 up. So in some cases, you can manipulate that enough to where you actually taking money from the bank if you turn that loan over in a certain time. That's getting deep into the math, but those things are what, again, seeing it on paper and then hearing about it is what helps separate us from everybody else, taking that extra time to show you options, and not just say, hey, here's a 30-year fixed rate mortgage for you, and we charge this much money, and here's your rate.
And another thing I'd be cognizant of is discount points. I mean, almost in my entire career, I had less than 10 loans out of, like, let's say 120, okay, that, did not have a discount fee in there.
Wow.
I mean, because that's what they have to do. It's either a discount fee or you're going to get charged, an admin fee or an underwriting fee,
because their margins are higher. So in order to stay competitive in the rate field, you got to buy that rate down with them just to even get close to where we would be, maybe even giving you a credit.
Yeah. Yeah.
Again, second opinion. Always check us out. Right? Doesn't hurt.
Yeah.
And you don't. The misconception too with the borrowers that they don't have to wait. If you bought a house last year and your rate's in the 5s, you got to get a hold of somebody.
We have a ton of people right now refinancing from last year that we've helped out. I've got a VA roll closing on Friday. Bought a home last year. They're going down a percentage point.
Explain what VA ERL means.
So if you have a VA loan, you have a process, or can be part of a process called an interest rate reduction loan. Basically meaning if your interest rate, now it has to go down 0.5 point on a fixed rate loan. But if your interest rate can be reduced, you don't have to get a new appraisal. You don't have to requalify your income. It's a very easy process to get done.
Very easy. I'm doing it right now too.
Yeah. So, and you can save money. So these people are effectively lowering their payment about $100 a month. And they just bought their home, so they've literally they're about almost at the minimum time, because you have to wait 6 months and 200 or 200. Have to make 6 payments and wait 210 days now for VA as of February. So I'm right there. But we locked him in when rates were low, ready to go, giving him a much better deal, saving him money. And they just got in the home. So now they were able to, in their case, do no money down, VA, get in the home. And now they can refinance. In their case, they're not paying an underwriting fee. There's no appraisal fee. They're getting a credit towards the title fees. So they're really only financing what they owe.
Do they skip a payment?
So they're skipping a payment, yeah. In their case, they're electing to bring their escrow money to closing because they're skipping a payment.
Which that's a wash.
Which they'll get, and they're going to get their other escrow money back. So they have to finance into the loan.
Yeah.
So, but you don't have to do that. You can finance that into the loan. There's options that you can do. So, but point being, if you've got a VA loan right now and you did a VA loan last year,
so if you did it with a retail bank, you definitely need to call.
Definitely call us, because we can probably get you a lower interest rate and save you money, or maybe a lower term.
It's either going to, and we're not going to waste time. We can figure these things out in less than an hour. If somebody was to snap a picture of their mortgage statement and, hey guys, take a look at this, see what you can do. Less than an hour, we can say, hey, this mathematically makes sense. Here's the math, or
it doesn't.
Or hey, you're already in a great situation, but at least you know that you've explored those options and taken that 5 minutes for you to take a picture and text a mortgage statement or email it over.
Yeah.
Again, think about how much you get paid per hour or what your salary is. That's an egregious amount more money than what you actually make from a job.
Yeah, you could have. You could have. There's retail banks and mortgage bankers that have very competitive pricing. It very well could be that you went through one of them. You know what? We'll tell you. Hey, you know what? You got a great deal. Yeah, you got taken care of. You got a great deal. You're in a good situation where you're at. At least you're going to know.
And I'm going to put a particular company on blast right now, that just because it's been all over social media with government rates, and this is just pure facts. If anybody did do a loan with Fairway Lending in the last year, then you definitely need to be calling us. Again, you can go online and look that information up for yourself. It's all over. It's all over Facebook.
A lot of stuff about that up on.
And taking advantage of veterans and charging, again, almost a point higher. And the math on that, you'll see online if you look it up, is thousands and thousands of dollars more that these veterans are paying on their mortgage. Doesn't need to be. There's much better products out there.
Save money, save interest.
Look into it.
And to clarify, with the Earl, you no pay stubs, no nothing. It's just basically a streamline.
Yeah.
Right.
Yeah. Essentially, if you're,
it's a mortgage-only credit check too.
Yeah, mortgage. I'm kind of dumbing it down a little bit, but really, if there's a better interest rate that's a 0.5 point lower, and it makes sense to do, and you're decreasing your payment, that's almost really all that they're looking for.
Yeah.
Specifically on a VA loan, you know what I mean? Now, there's the FHA Streamline 2, which is a little bit different, but if you did an FHA loan in a similar, a lender that their government pricing typically is higher, so you should look at those too, because, the FHA rates are in the high 3s, to get a little bit of a lender credit, maybe you're in the low 4s, but if you have an interest rate in the 5s or high 5s, we'd have to go back and look, but I know for sure that there was OFO loans last year that were, in the high 5s on FHA, and even some conventional loans, I think were over 6 at some point.
Yeah.
So if you have one of those loans, you definitely should reach out to us and see, because there might be an opportunity to refinance there.
Yeah. Now I do have an Earl, but I'm also just this weekend alone with people are seeing the rates drop with 3 conventional, or they're people 29 years left, and looking at, we can do weird years, like we do 26-year fixed, 27-year fixed, and these clients are able to go down to 27, 26-year fixed, so we're knocking 3 years, 4 years off of their mortgage, and they're able to, their payment even goes down like $10. So
Wow.
I mean, you're telling somebody, I'm going to give you the same payment, but let's just go ahead and wipe out 3 years. So you've only made 1 year worth of payment in that house, yet once you refinance, it'd be as if you've already made 3 to 4 years worth of payment in that house, but it's only been 12.
Yeah, you don't have to go back to 30 years. You don't have to jump forward to 20 years. You, like you said, 25, 26, 27. You kind of got to get, what you're looking for in terms of a payment or whatever. Sometimes maybe you're okay with your payment going up a little bit, but you jump to 21 years for that's tens of thousands of dollars of interest that you're not going to pay.
Yes, ultimately this is an asset. All, what you're doing is moving that asset around so when you do decide to sell, or in that day maybe it never comes. Maybe you're accelerating that payoff and having no mortgage at a much more rapid pace. And with doing so, you've spent thousands. I mean, I'm talking tens of thousands, in some cases hundreds of thousands less in interest, because you've been able to keep hedging that bet down, or that term down.
It's just the mail lady.
I know. She wants something, though. You want to check with her? Rebecca must have left. But anyways, I actually priced out a 15-year recently, and it was like 3 1/4. So you can actually knock off, if you got 24 years left, go to 15.
Move to 15.
Keep the same payment you have now.
That's be huge.
9 years. That's huge.
That would be huge.
So,
and with Facebook, you always see these memories like, oh, look, this was a 5-year memory, and you can always think back like, wow, man, that seems like yesterday. So again, imagine having a mortgage that you've 25 years left, but now you're just jumping all of a sudden, boom, now you only owe 20 years within a matter of a couple weeks.
Well, and the thing is too, if just because rates were a little bit higher last year, moving forward is great, but if you do choose to do the 30-year, you're barely into your loan. You know what I mean? So you're not to that point where you're really paying a lot down towards principal. Where in some cases, it doesn't. We've run them where it's like, man, this doesn't make any sense to do.
Yeah.
Your loan's so new. If you're saving, $100 or something a month,
that's a big deal.
Now's the time to do it because you're still at the beginning of your loan.
Yes. Sure. And everybody's situation is different, so it's what service.
Yeah, it depends
your
on what's
needs
best
at that
for
time.
you. Yeah.
Just the people that have reached out to me, it's just because I've kind of set that up as an idea of looking forward. Like, if there's a chance to shorten a term and keep the payment the same, let's look at the math and see when that opportunity comes up. If it's there, great. If not, hey, at least we checked it out.
Well, and I mean, I'm sure some companies do this, but we are looking out for past customers, right? We are looking at their information. We are contacting them, sending out emails. Hey, listen, there might be an opportunity. I had one a couple months ago that we talked about that, the system recognized, hey, might be a refinance opportunity here. Boom, got a rate down in the low 4s, and she was somebody who bought last year.
Yep.
So we do look out for past customers, and we've had people reach out and said, hey, you know what? You're in a great spot. It doesn't make a whole lot of sense to refinance and pay some of these fees and that, or maybe, they had some money down, did a recast. I had a lady that did a recast. She didn't know whether to refinance or recast to get rid of the mortgage insurance. She closed last year. We ran the figures. It actually was. I said, hey, listen, to be honest with you, it's cheaper for you just to pay for the $100 or whatever for the recast than go through the whole process to get her rate would only go down like 1/8 of a 1/4%. It just didn't make any sense.
Yeah.
She's like, really? I'm like, yeah, we're here to help you.
Yeah,
you know what I mean? It doesn't do me any good. Save you money.
Yeah, hey, these guys gave me great advice. They helped me put my real estate investment and position into a better position for you and your family. Again, looking forward, like, where's your goals to be when you're retired? Do you want to still have a mortgage? Do you want to have as little of a mortgage as possible? Personally, my idea is have no mortgage when I retire, and we're always gonna have tax and insurance till we die. But if you can eliminate that mortgage payment at an accelerated rate, you get out from underneath that bank's thumb, and that, again, move the asset around. That's what, to your point, we're not selling cars. That's keeping up with these customers and keeping them informed. That's what's really important to us, on top of being cheaper and less than anybody else.
I feel like a lot more people need to start looking at their house as an investment, and not just where
where you live.
You're paying a mortgage on it, and that's where you live.
When you
move
rented, that was
around
fine.
a little bit. Yeah. Well, you move that money around, or maybe you shorten your term, or you've got equity now, so you get an equity line, and you do a home improvement, or we've talked before about the home side renovation and the FHA 203K loans. Well, those rates are down. Yeah. So maybe you don't have the money to do the equity line. You can do a renovation loan.
Yeah, that's actually a great point. Somebody wants a new bathroom, and you've got to see that you're paying attention to your neighborhood. You see the values are up. That's a really good point. There's that opportunity to get a fixed rate and borrow against the house to do those renovations that you want to do.
And the time to do, not only rates are low, but if you think about it, contractors are going to be getting busy. Spring, summertime's come around, and all of a sudden, you can't. Yeah, you can probably find somebody, but to find somebody good, now you're at the end of the year. So if you're going to do something like that,
And the good thing with those, 'cause I just closed one on Friday, is that the bank does help protect you with those contractors. So
There's a draw system. Yeah.
and
they don't
they're-
get all the money right
and
away.
they have somebody monitoring that person as well to make sure that those draws are going to what they're supposed to be going to, and that you're not going to have somebody just take the money and run. Like that part of it does help protect you with the contractor side. And some people it could be frustrating, but it's for to protect you. There's too many bad contractors out there.
Yeah.
And that's a different story. for
There's
another day.
that.
some bad
There's
people out
The shortage of inventory in Columbus right now, it also allows you to pick up a house at a bargain price. You know what I mean? Because a house that's maybe, dilapidated or vacant or whatnot, if you get a renovation loan, you could basically get a brand new house at the same address.
Yeah. And if
It's
you're looking
your dream
at
home.
Right.
and if you're looking at a lot of the bank foreclosures that are out there and things like that, they will specifically put clauses in there that it has to be an owner-occupied property first. So you're not going to be necessarily outbid by an investor or somebody with cash, because for a period of time they're going to open that up for primary residents only, to where you can go and put your offer in, and if it looked good for you, get accepted and find your contractor. So like you said, especially with the shortage of inventory, that's becoming a better option.
Yeah, and you use and just so people are clear that the house is what pays for those renovations. So to simple the numbers, let's say that house is $100,000, but I can put $70,000 into this, and they come and say, you know what, if you do that $70,000 renovations, this house is really worth $200,000.
Because you bought it under market value.
Exactly, and so they're going to give you that loan and those funds to fix that house up, so you're not coming out of your own pocket. I mean, not many people have $70,000 laying around to renovate a house, so it seems unobtainable. But there is a way to get it done. And again, if everybody works as a team, you got the good contractors, those can get done in 30 days or less.
If the contractor gets you the bid.
Yeah,
I mean, that's the key.
It comes down to having a good contractor, for sure.
Yeah, it comes down to the contractor.
The thing is,
for sure. It could also go 90.
It could, yeah.
or more, depending if it's a terrible contractor.
Exactly. And those are things that we'll address with you up front, and just to make sure that your ducks in a row, so let's get ready for this. And I mean, how many episodes have we talked about preparation? I mean, it's being prepared and get yourself ready to obtain that financing.
Yep.
Start building.
Start building.
So, yeah,
We've got one-time closed construction loans too on FHA, VA, conventional. We actually have another lender stepping into that space. So now we will have multiple lenders offering one-time closed construction loans on multiple lending platforms. So, maybe you're looking to build a home, and that's an option for you too. So with low inventory, that could be an option for you. It just depends on what you're looking for.
Nice.
Something I wanted to touch on real quick. I've been finding too a lot of first-time home buyers going out and maybe go out, look at a couple houses, see a couple they like. Oh, there's 4 or 5 bids on there. They lose that house. Find another one up, 4 or 5 bids. They lose that house. They become discouraged, and we're just going to wait. We're just going to sit and we're going to rent another year. That's. If you never bought a home, it is, and it's you're always chasing your own tail. And again, math proves these statistics. Doing it again. Back to the guy I'm helping out. His house that he bought last year was $235,000. Today, it's worth $245,000. Had he not bought that home, now that house is $10,000 more. Not to mention, no one knows where rates are going to go. They're really low right now.
Which is $10,000 of lost equity and a higher payment.
Yes, and so now all of a sudden, your house that you thought you were pre-approved for this year at this dollar amount, now you're going to be pre-approved for, depending on where rates are too.
And the other kicker, what if rates actually did increase like they were supposed to?
Yeah.
So now you got $10,000 lost equity, $10,000 higher price, which is with the same rate is higher, but then rates go up. Now, your mortgage payment could be, who knows, $80, $100 higher, but all that adds up. So.
And then to further expound on that is when you rent, it goes to nothing. You get nothing back when you move out of that rental. The interest that you get to write off as being a homeowner, you're not writing your rent off. And if you're W-2 or self-employed, you get a W-9 form. So you
can punch a hole in the wall.
Yeah, and then you keep your security deposit. But the point is we can understand the frustration, but at the same time, you gotta just being patient with the process, and in some cases it's maybe you stay in that competition. If it's a house you really like it, maybe it's worth spending $2,000 more. Because again, a year later, if it's $10,000 more, you'll look back and say, man, I really wish I would have went $1,000 or two higher, because now you're still right side up. And that's what Columbus is doing. I mean, you can go back and just look. The proof is in the math right there. So if you're out there looking and you've been discouraged, you just keep patient, just keep looking. That the right house will show up. But waiting is, again, if Google stock dropped, you're not going to wait for it to go back up again and invest into it. You got to jump into it and take those, because you know what's coming. It's going to go back up.
Plus, give us a call. I mean, we have a lot of people that have a lot of houses.
Yeah, we know.
mean, really.
A lot of agents, a lot of home investors. We work with a lot of real estate investors now, home flippers. We know people that are actively rehabbing, that we're helping refinance right now, or agents that we work with that might have coming soon, things like that. Maybe they specialize in a specific area.
It's called a pocket listing, and that happens. If an agent get a listing inside that office, and they'll share with their realtors first, and hey, here, this buyer can get this, and
coming soon.
Yeah,
I've closed those. Hey, this is never going to hit the market. Agents within an office, I got this one coming up. Hey, I got a buyer for you. And actually it was my buyer, but those things happen. So
that's what I always tell people: the best time to buy is yesterday. The next best time to buy is today.
Yeah. That's
because it's only gonna get worse. It's not gonna get any better.
Talking about houses, steaks,
Yeah.
sushi.
It's golf season too. Did you notice?
It is golf season. Dude, golf season.
It is here.
Blue Jackets last home game today.
Today? You going?
No.
No.
Can't, man. I
Who
want
are
to.
they playing?
I don't know. Are they playing? Oh man, that's a
Who?
big game. The Bruins are good.
Ooh, yeah, Boston. That is
Boston's
good.
good at everything.
And they're on a 3 or 4 game win streak.
Three
game. Yeah, 3 game.
Wait,
And we're in the first
The
wild card
Jackets?
spot right now. Yeah.
5.
Is it 5?
5.
Oh, 5. Yeah, I just remember that.
All I know
winning
is they've
streak
been
started
shooting
from the other
goals.
day.
It's like NCAA
Insane.
tournament, man.
Yeah.
It's like none of these 1-0 games. It's like
Is anybody
5-0.
still in that tournament poll?
No.
So if Virginia wins, I win.
Really?
I had a Virginia in one of them
Nice.
because I had Duke in the other one, so everybody had Duke.
All right.
Not everybody, but most people had Duke. So when they had, that made it big time.
Sure.
Now Virginia's got to win, but we'll see.
Nice.
I'll take it. Any deals of the week?
Deals of the week. I have a bank statement deal. Pretty big one.
There you go.
Yeah. 24 months bank statements, personal.
Oh, nice.
They take the average of the deposits.
You can do that with you can do it for if you're a business owner. You can take 24 months business bank statements for the income.
They did not use his business, though. They made me use
Yeah.
personal because his business was an IOTA account, which is a law firm's account where
Trust account,
all the things
yeah.
are coming in.
Yeah.
And, the deposits were like
Do you need-
Crazy.
crazy amounts of money. You know what I mean?
Is there a certain threshold of there needs to be at least an average carrying balance of X amount of dollars in that account?
No,
No, it's just
no,
the
all on
average.
deposits. Deposits only. Look at deposits because I have a guy building doing it.
Mm-hmm.
Now I'm using business bank statements, and you can't use any in this particular lender. You can't use any transfers in, of course, from their bank account because that's probably not a business deposit. But he coaches, and so he's got a lot of cash and checks and things coming in. So he's took all the deposits. When his camp starts, huge month, then kind of rides it out. Because you got all the funds for those people, and then it goes down. But it doesn't matter because it's an average over 24 months. So nice program. He only has to put 10% down. Good credit score. Rates aren't bad. Right in the I think it's in the mid to high 5s, but not bad.
No.
For that type of program.
I mean,
So-
you're not submitting banks or tax returns for a self-employed person. You're
no
just
tax
going off-
returns. Yeah, no tax
That's huge.
returns going off his deposits. Because he doesn't. He knows he doesn't show
Yeah.
a lot of income on his
It's,
his tax returns.
self-employment can be a double-edged sword.
Yeah.
It can be great, but sometimes trying to finance could bite you
Yeah.
in the butt.
Well, in his case, he's got a plan of.
Yeah.
He knows he needs to show more income so he'll qualify for a conventional loan, which he's working on. But he wants to buy a home now because he knows the longer he waits, if rates go up, if prices go up, it's only going to get it more expensive. So get in there now, get the equity moving, get the tax benefit and the write-off.
Certainly. Oh yeah, there you go. Tax benefits right off. So staying a renter is not a good idea. Let's circle back to what we talked about in the beginning. Having a retail bank, and this is either dead deal. So again, wholesale, having options. Hey,
Yeah.
here's my situation. Here's my scenario. hey, yeah, we got a lender for this. You know, if you walked into a retail bank, that you're not getting this done.
So then I've got two. The deals of the week that's the same process, but investor he bought 2 properties. He actually lives out of state. He's already rehabbed them within a couple weeks, and he wants to rent them out long. He's going to increase the rents, rent them out long term, so he can do the debt service coverage loan, where basically as long as the rent is up to 80% of the mortgage, and he's got a better score and he's got the equity there. That's not a purchase. He's refinancing these, but he's paying off his private investor on one, and the other he's paying off. They invested their own cash, so they're getting their cash back, and he's holding these long term. And those rates were in the mid 6s on a 7-year ARM.
Is there a cash out hit for that because it was his money in the beginning?
Well, it's non-QM, so it's a little bit different. There's not really the adjustments there, but point being, in fact, I just got another email at 3:45, another lender offering it. So now, what was okay. We do have a lender that can do it, but we only have one.
There's a lot
or
now.
two.
There's several.
Now there's 4 or 5, and that makes a difference because, especially in that world, where those rates are kind of dictated on how much money they have or how much money they want to lend. Now it becomes a competitive market because you have more than 1 or 2 players. You've got right now at least 5 or 6, and probably more than what we know of. But point being,
and they're still coming out.
That's going to help drive down, those rates and terms and things like that on that loan. So that's huge.
Yes, it's again, competition is a good thing, and. So, again, you guys out there looking to buy homes, you've got to ask questions. You can see our hashtag ask is we live by that. You've got to ask questions. Make sure you know what you're getting into.
Yep.
Cool.
Anything else?
Just to verify, we are on Spotify now and iTunes. Also.
Oh, yeah.
So if you didn't tune in the right way, that you can see us there too now. That's all I got for today. How about you guys?
It's like a funny episode one time, like a chicken wing eating contest or something.
Dude, let's do hot dogs.
Oh. I'll be throwing up in here the rest of the afternoon. Like, that was a terrible idea.
That was season 11. There is no episode 12.
Recovering for a week.
We could do pizza. Have a sponsor.
Yeah.
We'll get AJ in here. He ate 8 large pizzas one time. I watched him do it.
8 large? Dude, there's a place in Delaware where if you eat the whole pizza, they pay you $100.
No, 5. I'm sorry, not 8. 5. It's like 40 pieces.
Yeah,
that's
you hear
crazy.
What I said? The place in Delaware, they pay you $100 if you eat the pizza.
How big is it?
It's huge. It's
man, I don't know if I want to go through that.
Half of the
that pain.
That
I mean, I like pizza, but I don't know, man. If it was like 1,000, I might attempt it for $100.
You find my stretchy
Yeah.
pants.
Go
I don't know
down
about
to
that
Thurman's
pain.
and get one of those Terminators.
Oh, that thing's good though. That thing is good.
gigantic.
That's crazy.
There we go. Ask the viewers. What do you want to see?
What kind of pain and suffering would you like to see? One of the backyard chips. We can do one of the backyard chips. I'm not doing
Jackass show now.
Or we have a shot contest.
That would be very
Right.
entertaining, I'm sure.
All right.
Oh,
I think that's all we got.
I think
We
that
should-
wraps it up.
We'll definitely want to, thank John for joining us. He'll probably be on some more of
Yeah.
these. But if you guys got questions, definitely a good resource. Somebody who knows what's going on. Definitely reach out to him, and he can help you out. So
Cool. Have a good day.
Have a great day, guys.
we'll see you.
Right.